Good morning, everyone. My name is Jana, and I'd like to welcome you to our virtual discussion and provide you an outline of what you can expect from the presentation we'll be giving. The topics of value-added tax and excise tax will be covered in detail throughout our discussion. In addition, you will have the opportunity to learn how to properly compute the aforementioned topics and concepts. In my part, I'll discuss VAT, or value-added tax, as it's more popularly known. I'm going to explain what VAT is and who is needed to file VAT returns, and then distinguish between output VAT and input VAT. Enumerate the different types of sales for VAT purposes, and then provide you an example problem on computing VAT payable, together with BIR forms and deadlines. So without further ado, let's go straight to my discussion. So what is value-added tax? Value-added tax, or VAT, is a form of sales tax. It is a tax on consumption levied on sale, barter, exchange, or lease of goods or properties and services in the Philippines. VAT is collected on a product at every stage of its production, during which value is added to it, from its initial production to the point of sale. The amount of VAT that a user pays is based on the cost of the product, less any cost of materials used in the product that have already been taxed at a previous stage. Value-added taxation is based on consumption rather than income, in contrast to a progressive income tax, which levies more taxes on the wealthy. The VAT is charged equally on every purchase. Now, how VAT works? A VAT is levied on the gross margin at each point in the process of manufacturing, distributing, and selling an item. The tax is assessed and collected at each stage. That is different from a sales tax system, in which the tax is assessed and paid only by the consumer at the very end of the supply chain. Now the question is, who are required to file VAT returns? Any person or entity who in the course of his trade or business sells, barters, exchanges, lesses goods or properties, and renders services is subject to VAT if the aggregate amount of actual gross sales or receipts exceeds 3 million pesos. And a person required to register as a VAT taxpayer but failed to register, and any person, whether or not made in the course of his trade or business, who imports goods. So let's try to distinguish between input VAT and output VAT in the perspective of a VAT-registered person or entity. So when we say input VAT, these are VAT or taxes that occur from the purchase of goods and services. Conversely, output taxes occur from the sale of goods or services of a VAT-registered person. These are actually the indirect taxes that can be shifted or passed to the buyer of the goods and services. Now, for VAT purposes, there are 3 kinds of sales. The regular sale, which is subject to 12% VAT, the zero-rated sale, and exempt sale. I want you to listen attentively because my groupmate Jerome will give you illustrative problems in order for you to learn the proper computation of VAT.
What's up guys, I'm Jerome Navarro and I'm going to discuss 4 illustrative problems. So let's go to the first problem. S company sold on out 112,000 inclusive of VAT to company B. Both are VAT registered. Now S company's purchase in cash for quarter in 70,400, which is also VAT inclusive. So the journal entry to record the purchase with input is we debit purchases or inventories 70,000 and the debit input VAT 8,400, and we credit cash 78,400 to record the sale with output debit accounts receivable 112,000 credit sale 100 100,000 and credit output VAT 12,000 to compute that payable. Compare your output VAT with your input value, which is we have your output VAT of 12,000 and input VAT of 8,400. So the difference will be back payable of 3,600. To set up or record VAT payable, we debit output VAT 12,000, credit input VAT and 8,400, and then credit VAT payable is 3,600. Number 2, company sold 100,000 MV sale is considered as zero written the journal entry. To record the purchase with input VAT is the same with your case number 1. But to record a zero rated sale, we debit accounts receivable 100,000 and then the credit sale 100,000. Now for the zero rated sale, there will be no output VAT, but you can still claim input VAT from the related purchases. So to compute the payable, there will be no output VAT, but the input VAT from the purchases is still there, 8,400. So we will have a credible input VAT 8,400. Now to take note, the creditable input VAT like input VAT is considered a temporary asset. Now in case number 3, the sales that we are talking about here is VAT exempt as company's purchases in cash. For the quarter is still 70,400 but inclusive, so to no record the purchases with input VAT is also the same with our previous cases, and to record but exempt sale account receivable is debited for 100,000 and sale 100,000, which is also the same with case number 2. Now to compute the VAT payable, the difference with VAT exempt sale with zero rated sale is that we cannot claim input VAT for related purchases for such sale, so there will be no VAT payable nor creditable input VAT. Now take note that unused input VAT purchases of goods, properties, or services related to the exempt sales shall be considered as part of the cost. It shall then to be closed to an expense account or income summary.
Good day, I am Laga Magali, and my assigned topic is excise tax and its types. Excise tax is a tax on production, sale, or consumption of a commodity in a country, the applicability of which is on goods manufactured or produced in the Philippines for domestic sale and or consumption for any other of disposition and on goods imported. Now, in the Philippines, we have 2 types of excise tax. First is specific tax, the second is ad valorem tax. Now, when we say specific tax, this is our excise tax which is based on weight or volume capacity or any other physical unit or measure. The manner of computation is number of units for other measurements multiplied by the specific rate. Conversely, ad valorem tax refers to the excise tax which is based on selling price or other specified value of the goods or articles. It could be computed by the number of units depending on measurements multiplied by selling price of any specified value per unit multiplied by ad valorem tax rate. Now, some of the major updates of excise tax is upon the effectivity of trade law.
Hi, good day. I am Sarelen Pogoy. I am the Group E's Port Reporter. My task is going to discuss about of some basic things in excise tax and some major updates of it upon the effectivity of train law.
Some of the major updates on excise tax is upon the effectivity of train law, which added some products and services and sweetened beverages, but do take note of some exceptions and other things to consider So to enumerate some of the major classification of excisable articles under the tax code as amended, we have the first one, the alcohol products, under which distilled spirits, wines, fermented liquors. Second one is the tobacco products, under which tobacco products, cigars and cigarette. And last, inspection fee. Now we have the third one, the petroleum products. And fourth is the miscellaneous articles. Under these articles is the automobile. Now, take note that if automobile is purely electric, then no excise tax shall be applicable. For hybrid vehicles, such those 50% run by electric, and 50% of the applicable excise tax shall be paid.
Hey, what's up guys? This is Raul James and I'm going to talk about persons liable to excise tax. So, persons liable for excise tax could be in general on domestic or local articles. The manufacturer, producer, owner or persons having possession of articles removed from the place of the production without the payment of the tax. And then, on imported articles, it would be the importer, owner, person who is found in possession of articles which are exempt from the excise taxes other than those legally entitled to exemption. And then the others, it would be on indigenous petroleum. In general, the payment of domestic products would be before the release from the place of the production, whereas on imported products, it would be before the release from the customs custody. Alright, so that's basically it. That's the end of our discussion. So we do hope that you have learned something new about value-added tax and excise tax. In behalf of Group E, I would like to say thank you so much for actively listening, and once again, good morning.